The escalating conflict involving Iran is now rippling through the global financial markets, forcing investors to rethink one of the most popular investment strategies in the past year, which is selling U.S. assets and buying Asian markets.
While the so-called Sell America, Buy Asia trade had been a major theme on Wall Street, still the sudden geopolitical shock in West Asia is now exposing Asia's vulnerability to energy disruptions and reshaping global market sentiment. For much of 2025 and early 2026, global investors had been shifting money away from U.S. stocks towards Asian equities, betting that faster growth and lower valuations in Asia would outperform America's markets. But the Iran conflict has punctured that strategy. Asian markets have been hit harder than expected because the region relies heavily on imported energy, especially oil shipments from West Asia.
The risk centers around the Strait of Hormuz, which is a crucial global shipping route that carries about 20% of the world's oil supply. Any disruption to traffic through this narrow waterway can quickly push up energy prices and disrupt supply chains worldwide. In recent days, tanker traffic through the strait has sharply dropped, with dozens of vessels delaying transit amid security risks. The conflict has already driven oil prices higher and also has injected fresh volatility in global markets.
Asian economies are particularly exposed. Countries like China, Japan, South Korea, and India depend heavily on West Asian crude imports, meaning higher oil prices quickly translate into higher inflation, weaker currencies, and pressure on stock markets. This vulnerability has led investors to reassess whether Asia can continue outperforming the United States in a world of rising geopolitical risks.
And at the same time, the broader conflict has already triggered turbulence across global markets. Stocks in the US, Europe, and Asia have seen bouts of volatility, while oil and gas prices have surged as traders rise in the risk of prolonged supply disruptions. For investors, the message is clear. Geopolitics is once again shaping global market strategy. What looked like a straightforward bet on Asia's growth story is now colliding with the stark reality. Energy security and geopolitical risk can quickly change the direction of global capital flows.